What's up, everybody? Welcome to part four, I believe it is, of Advanced Fundamental Analysis, where I am basically doing a series on a deeper dive into fundamental analysis uh, via pretty much quantitative means. So basically, taking a deeper look at the numbers that you may or may not already know how to evaluate. So today's session is going to be on what's called common size analysis. So basically, common size analysis is uh, a it's a method for determining line items in the financials as a relationship or as a percentage of one specific item in that financial statement. So you see an income statement. Well, you see a common size analysis for Qualcomm's income statements here on the screen before you, but you can also do it for the balance sheet. excuse me, the balance sheet and the cash flow statement. So uh, typically on the income statement, you see a common size analysis done as a percentage of total revenue, which is what we have here. On a balance sheet, it's usually done as a percentage of total assets. Sometimes you'll see it done as a percentage of total liabilities and shareholder equity. Um, but you can see it either way. Just think of the overall equation for a balance sheet is shareholder equity plus liabilities equals total assets. So it's balanced on both sides of it. And then the cash flow statement is usually done as a percentage of, is it total cash, or I think it's cash as a percentage of total sales or total cash. So the common size analysis allows you to quickly spot trends in a financial statement. So you're not just looking at that raw data where you just have the raw numbers that really don't tell you much on its face, right? So doing the doing the common size analysis allows you to see things like, okay, what kind of have there been any kind of radical changes in these numbers? So, for example, here on the line item other operating expenses, you see from 2012 to 2014, there was, relatively low um, percentages. And then all of a sudden in 2015, you get a jump from 1.8 to 5.1%. So something like that you can easily see I cannot say common size analysis. You can easily see with the common size analysis, whereas if you were just looking at the raw data on the income statement, you probably wouldn't see it as readily. Um, you also, you also look for things like, you know, what percentage is this company's research and development? So especially if it's a company that, like a biotech company, semiconductors, companies that produce a lot of IP, produce a lot of put a lot of research into producing and products and services. So, you know, you want to look for things like, okay, what is the average percentage of total revenue that is the research and development line item over time, and then look for any type of significant changes in those numbers. So, for example, looking at Qualcomm, we see from 2012 to 2014, it was, around 20, pretty much 20%. So let's say 2015, you see like all of a sudden it drops to like 15% or 10%. Then, your eyes will be drawn to that, and you'd be drawn to investigate why the sudden and significant drop in its research and development budget. Um, so yeah, you can easily spot trends with the financial statements, with the financial statements when you do a common size analysis, and it's a lot simpler to compare different statements with competitors. So if I do a common size analysis for Qualcomm income statement, it will be easy for me to compare the common size analysis for an income statement for a Qualcomm competitor, like Texas Instruments or whatever, or Intel, stuff like that. So you'd be able to see across industries, okay, what is the average R&D percentage, R&D as a percentage of revenue for this industry, and then kind of see where your target company falls within that trend. Um, you can also, the common size analysis also allows you to see things like capex, capital structure. You can evaluate, share repurchasing. Um, One thing that is significant as well is looking at the company's margins, right? So if I see a company with that may low margins could mean that the company is not really the management is not doing a really good job with managing costs. But it could also mean that this particular company is sacrificing margins for growth, right? So for a company to grow and to grow at a rapid pace at that requires a lot of capital expenditure. So that's something that you want to look at. So if you see a company, that you're thinking of or that you're just evaluating for whatever reason, whether it be an investment or just, for a potential investment or whatever, look and see what that company's market share is. If I see a company XYZ, their margins are at, 10%, um, that may not be impressive for the industry. Let's say the industry average is like 20 or 30, let's say 30%. Then I'm going to be like, okay, well, why? What is this company doing in comparison to its competitors? And you may look and do some math on the market share for this company and see that the company has, I don't know, over 50% market share for its industry, which is a great thing, right? So um, that requires significant investment to be able to do that. So, um, what else can I say about common size analysis? It's very, very simple. Um, you pretty much just go down each line item and do divide it into that total revenue. And of course, total revenue, you're going to start with 100%, and then it just breaks down from there. Um, and it quickly allows you to see the relationship between those line items and that and the revenue. So if I were to do a common size analysis and I see that uh, operating expenses are like 50, 60, 70% of revenue, then that's going to be concerning for me, generally speaking. Um, and like I said, you may not be able to easily see that um, just looking at the raw data. And as you can see, just looking across, just horizontally or over time, you can see the changes in the cost of goods sold for Qualcomm. Are these numbers growing? Are they uh, not growing? Are they pretty much staying the same? Just the common size analysis allows you to easily see that. Um, what else can I say about common size analysis, really? Hmm, just checking my notes here. So yeah, just a quick recap. It allows you to evaluate numbers vertically. So vertically meaning in 2012, what did these numbers look like as a percentage of total revenue? And then horizontally, which is over a period of time, um, as in each from one year to the next. So you can easily spot trends. You can easily compare financial statements with competitors. Um, you can determine, or it can help you with determining if a company is sacrificing margins for market share. Um, it's not, it's definitely not something that you want to use as your sole tool for evaluating a company, but just use it as a piece, because you definitely want to look at multiple years of financial information for any type of long-term investment. Um, so yeah, I think that's pretty much it. That's just hitting on the high points when it comes to a common size analysis. Um, yeah, yeah, that's it. Thanks for watching. If you guys have any other questions, um, if you'd like to learn how to do common size analysis, like I said, it's pretty simple. I think I briefly explained that, but if you want any additional help, just hit me up, leave a comment, send me an email, lance@bhcapitalenterprises.com. If you have my social media, you can send me a message there. Pretty easy to reach me. Um, so yeah, that's it. And I will. Thanks for watching this week's series. Um, Next week, I'm not sure where we'll pivot into next week, but we'll continue this discussion next week on advanced fundamental analysis. And I hope this was informative for you guys. Like I said, if you have any questions, feel free to hit me up.